for his take on the global picture. Pete McGuire from XM joining us now live. Pete, good to catch up with you on a Monday morning. All right, so this week it's all very much about central banks and their policy. Where do you want to start? Why don't we start in the States? Of course,
Yep.
a 50 basis point hike priced in. Do you think they're going to deliver, and what's the reaction going to be? I've already seen it.
Well, good morning, Andrew. I think they will deliver. And what's the reaction? You got the US dollar index sitting at 103. We nearly touched 104. We're just a whisker away. So there's the point in time that, currencies are collapsing against the strength of the US dollar. You're bordering on the possibility of even parity as far as US dollar euro, 1-for-1. Who could have thought that? So that's a little bit of a reality check, and look at the weakness as far as the yen. So that overall theme, US dollar will continue to probably edge higher, but I think a lot of that news is already baked in.
All right, we'll get to the Aussie in just a moment. But the BOE, Bank of England, also going to move, or expected to move this week, as central banks trying to catch up with inflation, obviously.
Absolutely, 25 basis points. That's what everyone's tipping as far as the BOE. So there's the storyline there, Andrew. People are being pinched globally as far as inflation, and that seems to be the major concern. I know we're in a super cycle. We're in a super cycle of inflation. So that's the story, and that seems to be biting everyone all over the globe. So growth is going to be interesting come third quarter.
So, Pete, the moves by the Fed and the BOE much more predictable than our own central bank, with the Reserve Bank making its decision tomorrow. A lot of debate of whether they're going to move or leave it to perhaps a larger hike in June.
Well, that's right. I mean, you've got an election, and there's the first point. You've got weakening numbers as far as real estate, as certainly across Sydney, and auction clearance rates and all of those sort of metrics rolling in. So, yeah, if they move, we've got inflation sitting at 5.1%, but if you probably use the real numbers, then could be significantly higher than that. So there's the point in time that we've got to be very conscious of, and how aggressive our central bank's going to be. I feel as though they should move, but it's going to put a lot of hurt to Main Street.
Yeah, because where we look at inflation in Australia right now with the latest CPI, I guess the question is, we feel as though, well, in the States that they've reached peak inflation. Not necessarily the case here.
No, very much so, Andrew. And I don't know whether the States have reached peak. I think there's probably further upside yet. We had foreclosures. This is a number that you need to be very conscious of. US foreclosures in March surged 181%. So there's a real storyline as far as residential property. And let's hope that that doesn't capture the Australian market with that same level of intensity.
All right, let's take a look at the Aussie dollar, where it's been in likely scenarios. So it has lost significant value recently, of course, as we've seen that strength in the US dollar. But also when we're looking forward there, if the Reserve Bank doesn't move tomorrow, what's the likely movement with the Aussie?
Well, I think it's probably going to be a sub 70. I would have thought it had range bound, a 73 to 77 handle, but it's just collapsed because of that strengthening US dollar. So if we don't move, then it's at 70.65, Andrew. I think that you'll see further softness. You'll probably take 70 out because it just seems to be in a downdraft. If it does move, then you'll see it, rally and probably put on a cent or two. So there's the story there. Unbelievable market to trade, and it's just been extraordinary, the whole currency complex over the first 4 months, and naturally shorting US equities.